Hello traders and investors, I welcome you to Trade with Armin. If you're new here, don't forget to hit that subscribe button and turn on notifications. We provide in-depth gold price analyses every week. In today's update, we'll be revisiting our previous analysis from Friday, where we discussed gold's approach to a crucial support zone at $3,244. Since then, we've seen some interesting developments. Stick around as we break down the updated technical structure and the key news influencing gold right now. In Friday's video, we outlined two key levels to watch. Support around $3,244, where we expected gold to find buying pressure. Resistance around $3,380, a major area where we anticipated potential profit-taking. Looking at the chart now, we can see that after testing the $3,244 support, gold made a strong bounce, confirming our expectations and providing us with a clear buying opportunity. So, if you were following along with that analysis, you should have been ready for this move. Let's take a closer look at the updated 4-hour chart. Gold has been consolidating in a tight range between $3,244 and $3,310, showing a potential bullish setup. Notice how the 9 and 21 EMAs are providing solid support, indicating that buyers are still in control in the short term. The RSI is hovering around 45 to 50, a neutral zone that shows there's still room for gold to move higher without being overbought. One thing to keep an eye on is the $3,300 to $3,310 resistance zone. A clean break above this level, especially with strong volume, could trigger a sharp move toward our next target, $3,380, and then possibly up to the $3,500 to $3,560 area, a major supply zone. For now, the main levels to watch are support, $3,244. Next key support, $3,167. Resistance, $3,310. Target resistance, $3,380, and eventually $3,500 to $3,560. Now, let's break down the key news affecting gold prices this week. US GDP data on April 27th. The US GDP data came in stronger than expected, which gave the dollar a brief boost, causing a slight pullback in gold. However, gold has remained resilient, holding above its support zone. Core PCE inflation, the core personal consumption expenditures, PCE data, is set to release soon, and it could have a big impact. If inflation stays elevated, gold could continue to attract demand as a hedge against inflation. Central bank buying, China and India have been aggressively increasing their gold reserves, which continues to provide strong underlying support for the market. Geopolitical tensions. Although the headlines have shifted, tensions in regions like Eastern Europe and the Middle East remain, which can continue to drive gold's appeal as a safe haven asset. In summary, while we've seen some short-term dollar strength, the overall long-term outlook for gold remains bullish, supported by strong fundamentals and ongoing global uncertainties. So, what's the strategy moving forward? Bullish scenario. If gold breaks above the 3,310 level and closes above it on the 4-hour or daily chart, I'll be looking for buys towards 3,380 and eventually targeting the 3,500 to 3,560 zone. If the breakout happens with strong volume, this could lead to a sustained rally. Bearish scenario. If gold fails to hold above $3,244 and breaks lower, watch for a potential pullback to $3,167 and possibly down to $2,998. However, I'm still leaning bullish as the overall momentum favors the bulls. Remember, fakeouts are common in gold markets, so I'll be waiting for a clean breakout confirmation before entering trades. Trading tip: patience is key here. Wait for a confirmed break above or below key levels with volume. Don't rush into trades based on early signals. That wraps up today's gold analysis. If you followed the plan from Friday's video, you should be in a good position to ride this move. Leave a comment below and let me know. Do you think gold will hit $3,500 soon, or are we due for a deeper pullback? Don't forget to hit the like button, subscribe, and turn on notifications for more weekly updates. I'll see you in the next video. Until then, trade smart, stay disciplined, and keep an eye on the markets.